Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies SOFI stock, and today we are going to be determining the future share price for Sofi Technologies over the next 12 months. Of course, we're also going to be going over their latest news updates to determine if this company is still a good buying opportunity right now, either for us to accumulate more shares or for us to initially invest into this company if you are new. Remember to go and smash that like button right now for more videos on Sofi Technologies. Subscribe if you are new. Comment down below your future price targets and price predictions for the Sofi share price. And without further ado, let's just jump right into today's stories. I want to start off with the latest price predictions among analysts as well as professional investors. Right now, the Sofi share price is trading for $7.62, and 5 analysts say that this stock is a great buying opportunity at this price point, and 3 of these analysts actually say to hold the company. And I would say this is actually very bullish and positive because right now, none of these analysts are actually saying or advocating to sell this stock. The lowest price target we have from an analyst that says that Sofi stock is a hold rating right now is $6 per share. So ideally, we would want our average cost basis to be around $6 to $7. However, the average price consensus for this particular company is $9.31, while very bullish investors and stock professionals actually think that the company is going to be worth $20 over the next 12 months, which is absolutely phenomenal. Even if we take the average consensus from various professionals, we can safely assume that the stock price is going to grow around 22.18% over the next 12 months, according to stock professionals, which would land at a $9.31 price target. And honestly, that is not that bad. However, on this channel, we go over both the bullish and the bearish news for any company that we cover. However, this particular author is going to take more of the middle road, and I actually like his analysis. The title of his article is Sofi, This Bottom is Real, Not a Dead Cat Bounce. If you're not familiar with what a dead cat bounce is, basically it's when a stock is falling in their share price and it suddenly rebounds very aggressively just to fall back even further in a relatively short time frame. Now, we can actually see that the share price of Sofi Technologies has increased lately due to their Q2 earnings report, so that's exactly what we are experiencing right here. However, more bearish negative critics of this company think that this is a dead cat bounce and that the share price is going to continuously fall. However, other professionals actually think that this is not a dead cat bounce and it will either maintain its current stock price between $6 to $7 and eventually start appreciating again. So in this video, we are going to be breaking down the data to determine which scenario is actually going to happen. So the author starts off by saying that Sofi Technologies is a fintech company or a financial technology company which operates as a digital bank by giving their consumers anything they could possibly need in terms of financial services and or financial products through their digital app. And the author also says that they had successfully predicted the Q2 earnings results, which aligns with their thesis, and that's exactly what we did. We literally called almost exactly what was going to happen for their Q2 earnings results, and we also anticipated that the stock price would surge, and this is mainly due to the amazing leadership from Sofi Technologies' CEO and their board of directors, which not only have implemented a fantastic business model, but I think they really weigh their risk to reward ratio extremely well. Now, despite a double-digit rally after their Q2 earnings report, I think the near-term upside for Sofi Technologies and their Sofi share price is really limited right now because I think that this good news has already been priced in, which is why I actually agree with the author that Sofi should have a hold rating right now, and the author of this article actually encourages investors to just wait patiently in the meantime and wait for a potential retracement before adding more shares, because this way you could potentially add more shares at a much cheaper price point. This will not only help you build more wealth over the long term, but it's also going to lower your average cost and average cost basis for this particular company, which I think is going to help out a lot of investors. Now, this isn't to say that the stock price couldn't continue to be stable or even uptrend from here on out, but as of right now, this particular author thinks that Sofi stock is going to be relatively relatively stable after their next correction or retracement. So he is saying, even though the stock price is trading at around $7.62 right now, it's most likely going to pull back between $6 to $7 potentially, or maintain a stock price of close to around $7.20. Now, the really good news in my opinion is that SoFi as a business has been executing on their long-term plan very aggressively, and I love to see that because I think SoFi Technologies is a fantastic long-term growth company to hold, because this company has fantastic future growth ahead of it in my personal opinion. One thing that I want to highlight in this particular article is that their personal loans have continued to outperform various expectations, while other lenders have actually seen somewhat of a pullback in their personal loans. However, this has not as drastically impacted SoFi Technologies, which is why SoFi's management actually highlighted SoFi Technologies' resilience in regards to their personal loan segment during the last couple of months, despite the overall negative macroeconomic environment that the company has encountered lately. Another thing that I want to point out is that their year-over-year growth in revenue on a percentage basis is extremely positive, and their adjusted EBITDA margins percentage is also extremely impressive. SoFi Technologies has had a 54% growth, a 41.6% growth, a 54.8% growth, a 48.1% growth, a 35.3% growth, and a 39.1% growth. And ideally, we just want them to maintain that CAGR, which is their compounding annual growth rate for their revenues, of above 30% for as long as possible. If they can maintain that, that is going to be absolutely insane, because once you can identify a very strong fundamental company that is growing their revenues year over year by around or over 30%, then this company is aggressively growing. I also would like to point out that their adjusted EBITDA margins percentage is also increasing very radically. For instance, they had a 1.6% to 2.7% to 5.7% to 7.8% to 10.9% to 13.5% and 14.3% to 15.7%. So clearly, we see that beautiful increase from their adjusted EBITDA margin percentage, and that is very good to see, because it means that they are on track to attain profitability on a GAAP basis, or a generally accepted accounting principles basis, in 2024, which is going to act as a huge catalyst and increase their overall stock price by a large margin, in my opinion. Not to mention, in our last video, we talked about how in 2023, the student loan moratorium is going to end, and that again is going to act as a phenomenal catalyst for SoFi's share price, and again, that is going to cause the stock price to ignite and skyrocket even higher. So we have a huge catalyst for 2023 and 2024, and once we can get over that hump of 2023, after the student loan moratorium and the student loan freeze ends, while the company is still growing over a 30% CAGR in terms of their revenue, this company is absolutely primed for long-term growth. However, this does mean that you're going to have to hold through volatile times during the short term, even if the stock price does pull back pretty drastically. The author goes on to say that he is confident that SoFi will continue driving solid operating leverage throughout the year of 2022 and for the full year of 2023, as it continues to work through its various fixed costs. I also want to point out that because SoFi has acquired Golden Pacific Bancorp, Technisys, as well as Galileo, all of these are going to increase their overall revenues as time progresses and lower their overall costs and expenses. So literally, as time goes on, this company just gets better and better. And we literally have hardcore data to back this up, because management even changed and increased their overall full year 2022 revenues to $1.51 billion worth of revenue, which is absolutely insane. So fundamentally, according to their financials, they are extremely strong right now. I do want to actually quote from SoFi Technologies' earnings report, where it says, and I quote, "We have a lot of flexibility. We are investing at a really high rate. If you look at our lending business, it's operating at really strong profitability. It's not as profitable as it would otherwise be with the student loan business, but still quite profitable. Our technology segment revenue, as Chris mentioned, has a very high margin. And then we are making a really sizable investment in customer acquisition costs in our financial services segment, which has a lot of upside to profitability and some huge milestones in front of us," end quote. So overall, they have highlighted all three of their segments. They have their lending business and their lending segment, their technology segment, as well as their overall financial services segment. And all of these are contributing to their overall revenue. However, in my opinion, their lending business business is bringing in the vast majority of their revenue. However, they are diversifying their various revenue streams as time goes on, so that's really good to see, because even during a recession, this company still looks like they could deliver very strong financial results. Also, their technology segment revenue has a very high margin, and they are consistently rolling out new products for their financial segment, such as options trading and a plethora of other new products that I made a video on, which I won't go over, but if you want, go ahead, go into the videos and look back and watch that one as well. So what does all this mean? Is SoFi stock still a good buying opportunity? Should we sell the stock or should we hold it? Well, honestly, it really comes down to your own personal investing style, your risk management policies, your upside, downside, risk reward tolerance, as well as your overall portfolio strategy. Now, the author says that in the near term, upside is going to be limited, and right now the current stock price reflects what the company should be worth. Now, that is highly debatable. It really just depends on what metrics we are using, because in my personal opinion, if we are using a discounted cash flow model, I would say technically SoFi could be undervalued. But if we are using a PS ratio and we are comparing them to their peers, then you could argue that the company is trading at a premium right now, which then I would respond with the company is a growth stock, and growth stocks normally trade at a future PE ratio or a future PS ratio that is rather high compared to other stocks like value stocks. And because SoFi Technologies is a prime growth stock, I think the risk to reward profile for this company remains very well balanced right now. However, the safest thing to do would be to wait for a pullback in the stock price before investing more and just being content with your current holdings for SoFi Technologies, which is why this particular author has reiterated his hold rating for this particular company. Now, this does need to be balanced with what we said earlier regarding how the majority of analysts are actually pretty bullish on the company and have very positive price targets for this particular stock. Now, with that being said, we have to go over their latest news updates, which I think could actually cause a slight retracement in the overall stock price. At least that's what the stock chart is looking at from a technical analysis perspective. And we can see this by measuring some short interest. Now, the good news is that short interest isn't always bad. And what do I mean by that? Literally, in some instances, it could cause a short squeeze, which would then invigorate the overall stock price. So when those huge catalysts come in for the student loan moratorium ending in 2023 and the company becoming profitable on a generally accepted accounting principles basis in 2024, those could absolutely cause the stock price to surge thanks to the short interest. According to Benzinga, around 130.43 million shares are currently being sold short for SoFi Technologies, and that is very high. Their short interest is around 19.82%, and it would take around 3.2 days to cover their short positions. Now, if you don't know what short interest is, basically short interest is the number of shares that have been sold short on a particular company, and that means that investors are hoping that the stock price will fall because that's how they are going to make money off of this. So clearly the investors who are shorting want this company to fall even lower, thus signifying their very bearish and critical view of this particular company. Now, why are we talking about the short interest? Well, short interest is very important to track because it can act as an indicator of overall market sentiment regarding a particular stock or company. Now, what's actually good when we look at their short interest is that their short interest has actually decreased compared to their last report, which is very bullish and positive. However, if we compare SoFi Technologies' short interest compared to their peers, we can see, according to Benzinga Pro, that SoFi has a much higher short interest, almost 20% compared to their peer group average, which comes in at a short interest of around 7.66% for other companies literally in their same sector. And if shorts end up winning, we could see the stock price continuously fall. However, I don't think that is necessarily going to happen. I do think that the stock price will correct by a small margin, at least in the short term, according to technical analysis. However, overall, I think the long-term growth trajectory of this company is very positive. So I would love to hear your thoughts down below. Remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and I will see you in the next YT video.